is always a real treat. Out of all of the presenters that we work with, I think Steve has the best jokes and has some methodologies that are really, really good. So I appreciate everybody's hanging in there for 4 or 5 minutes while we figured that out, got him online. Steve, I'm going to go ahead and cross our fingers that we don't have any more issues with the presentation today, but here I'm going to push the presentation controls over to you. And let's see if we can see your screen.
All right, so I'll do a little bit of back here. I've just developed or discovered over the last 40 years that there's about 12 major signals out of the 50 or 60 candlestick universe signals. And if you just know these 12 major signals, predominantly 6 long and 6 short signals, and you understand the rationale of why or how they were developed, then you have a pretty good grasp of what makes prices move, just like somebody that's been trading in the market for 50 years. And the problem I have found in the past is that everybody likes to have candlestick signals or charts on their screen, but they just don't know how they work. And I always kind of illustrate that as the young Indian chief or the young Indian kid that left the reservation. Graduated top of his class in Harvard, went on to Wall Street, made millions of dollars, and then his tribe asked him to come back to the reservation. So his heritage was much stronger than his will to make money. So the first day he was back at the reservation, standing in his teepee, all his elders came into the teepee and said, "How much wood should we collect for the winter?" And he had no earthly idea. He said, "Go out and come back in an hour and I'll have an answer for you." As soon as they all filed out, he flipped open his cell phone, called the local weather station, and said, "What do your indicators look like for the winter this year?" And they said, "Oh, about like what it was last year." So when everybody came back in, he said, "All right, collect enough wood, the same wood we had last year, but get 2 weeks worth more of wood." So they did. Just to be safe, a few days later, he called the weather station and said, "How's your indicators looking?" They said, "Oh, it's going to be a little bit colder than we thought." And he called everybody back in and said, "Go out and get another 2 weeks worth of wood." They kind of grumbled a little bit, but went out and got the wood. Just to be safe, a few days later, he called back to the station and goes, "What's it look like now?" And they said, "Oh, it's going to be even a little bit colder yet." He goes, "Oh, man," called everybody back in and said, "Hey, go out and get 6 weeks worth of wood, just so we don't have to keep going through this." And they all grumbled and went and got the wood. And then, so after that, he called the weather station and said, "What's your indicators look like now?" And they said, "Oh, it's going to be the worst winter we've ever had." He goes, "What? He goes, "What the heck is wrong with your indicators? You can't get anything right. You got bad computers or what?" He goes, "Oh, we don't use computers. We watch the Indians. The more wood they collect, the colder the winter is going to be." So I always tell people, if you have indicators on your screen, you don't know how they work, they don't do very much good. So with that, because we're a little bit behind, I'm going to kind of crash through this real quick. So what we would is the candlestick signals to tell us when there's a reversal, and then find out which reversals are going to be the biggest, strongest ones. We're looking for the highest profit, highest probability setups. And where do we expect a price reversal? What we were trying to figure out. And how do we understand the logic of the candlestick signals and the gaps? That's what we're going to go into. And then when we can identify which is the strongest price moves. So there are 4 basic gaps. And if you see those gaps occurring with these 12 major signals, and we'll probably go through a lot of these as we go through, and a gap basically is that price move where there's, on the chart, there's space between the trading range of the previous day to the existing day. So 2 of these gaps to show force. If you see a gap or a candlestick signal in the oversold condition, followed by a gap up, that's got a strong reversal force. You see a signal at the top, followed by a down, you've got a strong downtrend in progress. The other two show exhaustion, which is just as essential. The Japanese rice traders say, where do most people buy? Most people buy exuberantly at the top. If you see a gap up in the overbought condition and a candlestick reversal signal, get ready to take profits or go the other way. Same scenario on the downside. Where do most people sell? They panic sell at the bottom. If you see a gap down in the oversold condition, and that's the time to start watching for a reversal. So again, where do most people sell? That gap down in the oversold area. So anytime we see a chart like this, if you're short, you see a gap down in the oversold condition, and just real quick, on my charts you can see they're relatively, well, my stochastics are set at 12.33, slow stochastics. Basically, if the stochastics are below the 20, they're in the oversold. If they're above 80, they're in the overbought. On the chart, we have a blue line. That's your 50-day simple moving average. The gray line is your 20-day simple moving average. And on some of the charts, or on all the charts, you're going to see a red line. That's your 200-day simple moving average. Those are the moving averages everybody in the world uses on their charts. The advantage we have with candlestick signals is we can see exactly what the investor sentiment is at those levels. This is the line that you want to watch, this black line. This is what we call the T line or the trigger line. Very simple rule. If you see a candlestick buy signal and a close above the T line, you've got a confirmed uptrend. If you see a candlestick sell signal in the overbought condition and gap down, come back down through the T line, you're now in a good strong down. So what Japanese rice traders have been able to produce, or what they did for us, was just put common sense investment perspectives to a graphic depiction. So we're looking for a buy signal in the oversold area, such as a hammer signal. What are we looking for the next day? Well, if we see them gap down in an oversold condition and do a signal, the black line is what we call the T line, the 8 exponential moving average. And if you don't come away with any, this is on all our scans, very simple rule. If you see a candlestick buy signal and a close above the T line, you want to be buying. Now, I'll add real quick, there's a caveat to that. The caveat is the further away you move from the T line, the higher the probabilities it's going to come up, back up and test it. So on this chart, if they've gapped down in an oversold condition and produce a buy signal, and it starts confirming the next day, we know there's a high probability our next it's going to be up here to test the T line. Then we can see what it does at the T line to see whether we're still in a strong uptrend. And if it fails here, we know to come right back out. And so if we can get out of a bad trade with a small profit or a break even, we want to be doing that every time. So anytime you see that gap down, in this case, they gapped it down and gapped it right back up. This is one of the strongest reversal signals you're going to come across. That's that one-day island reversal that the Japanese rice traders call banded baby. And again, that's when we're looking at these signals, where are the stochastics? We're looking to see if we're in a downtrend and they gap it down. If we're already in the oversold area, start looking for a reversal. Now, in this case, if short, saw it gap down and started showing that there was supporting in here, cover my short position. So where is the T line? The further away we move from the T line and see gap down signals, we know there's a high probability they're going to come back up and test it. So if you were short, this signal here where they did it, followed by a gap down, you stay short, you see a candlestick buy signal. Again, remember, in all of this analysis, the most important factor is what are the signals telling you. So alerts are that if we see a gap down in an oversold area and see a potential reversal signal, the probabilities are pretty strong it's going to reverse. The slow stochastics, 12.33. I know I'm going through this a little bit quick. I'm trying to catch up. So there's even a case where you see a gap down in the oversold area, start watching for a reversal signal. So if you're real aggressive and you see a gap down, they start bringing it back up and you're down here, you can be buying immediately and expecting some sort of candlestick reversal signal. But anytime I see that gap down, especially in the oversold area, it doesn't have to be a big gap down, but when they gap it down and they do a candlestick potential reversal signal, if I'm short, I'm ready to cover my short positions. So you can see that anytime you start gapping away from the trend, you're going to have some sort of sell signal or some sort of reversal signal. They gapped it up here and pulled it back. This is what we call a belt hold signal. The Japanese rice traders explain the belt hold signal as two sumo wrestlers fighting. One's trying to back out of the ring. The other one grabs his belt, pulls him back in, and they're back to wrestling. That's a strong sell signal. On the other hand, down here, when they gap it down in the oversold area, for a potential signal. Bearish belt hold, bullish engulfing. Big gap down. Look for the reversal. There's your bullish belt hold signal. So again, higher. These type of moves could be buying at the ultimate times, because that's what the gaps tell you. Is that that's the exuberant or panic selling or exuberant buying at the top. The T line is the 8 exponential moving average. So, simple rule. If you see a candlestick or if you see a gap down in the oversold area, start looking for a buy signal. This is not rocket science. This is just what the Japanese rice traders put into graphics for us, telling us where is the common sense where everybody sells out in the uptrend. So you can get very powerful profits from the candlestick signals in the oversold area, followed by a gap up. What does a candlestick signal actually reveal? That there's a change of investor sentiment. And what does a gap up reveal? That after that investor sentiment, there's a very strong desire to buy. So if we see a candlestick reversal signal in the oversold area and they gap it up the next day, the probabilities are extremely strong you're going to be in an uptrend. So there was our hammer doji, followed by a gap up. We knew what our new target was going to be, at least back up here to the T line. So even if it came up here and failed, back out probably with a profit. You can see when the downtrend started. Type signal with a gap down. You can tell when it's time to take profits. If you see a gap up in the overbought condition, get ready to start taking profits. So the T-line is just added confirmation. Now, if you go back through the logic, and this is the most important factor of candlestick analysis, if the candlestick signals are the graphic depiction of what's going on in human nature, here they wouldn't after 400 years, and you add the T-line, is that 8 exponential moving average. It basically has Fibonacci characteristics to it. Everybody has the 200, the 50, and the 20-day moving average on their charts. They act like magnets. But the reason that the T-line is so effective, or because it's so effective, you have a T-line rule. Again, anytime you see that candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Remember, nobody has the T-line on their chart, so it doesn't act like a magnet. It acts pretty much like the graphics of a human nature uptrend or downtrend. So anytime I see that doji in the oversold area and they gap it up the next day and they close above the T-line, the probabilities are greatly improved that you're now in an uptrend. The T-line is the 8 exponential moving average, yes. 8 exponential moving average. So I tell people, don't take my word for it. Put the 8 exponential on your charts and see how well they work. And that's the nice thing about candlestick signals, is we know the signals work or they wouldn't be around for 400 years. And this is based upon the most simple, basic, and consistent indicator in the world, and that's human nature. So if we can do the graphic depiction of human nature, And then we can add the T-line, which is a kind of a natural trend analysis of human nature. You add those two together. If you've got a candlestick buy signal, gap up, and a close above the T-line, you're probably going to be in an uptrend. What is the significance? Aaron, it's just because it works for us. Want to try the 9 EMA? Go right ahead. If you want to use the 10 simple, go right ahead. We just know right now that the 8 exponential moving average works extremely well. So anytime I see this signal, here's a bullish engulfing signal with a booster. There's the booster rocket. They gap it up the next day and close it above the T-line. Probabilities are pretty strong you're in an uptrend. The bigger the gap, this is what we call your best friend. That's a doji in the oversold area, followed by a gap up. And I think we've got those on MetaStock as far as our quantitative, which ones work the best. The best trend is number one. The reason for it is it works extremely well. That not only will you be in an uptrend, you'll be in a strong uptrend, and the frequency of them working, or the frequency of them appearing, is quite strong. So you've always got the best friend signals to work off of. This works on intraday. Fortunately, intraday, Harold, you won't get as much gapping. The signals work extremely well, but obviously with the price trading continues, unless there's a real severe movement during the day, you're not going to get that many gaps. So a lot of people ask, what does this work on? This works on stocks, commodities, currencies, bonds, tulip bulbs, anything that has fear and greed in it. Candlestick signals are merely the graphic depiction of what's going on in human nature. So again, a doji in the oversold area followed by a gap up is your best friend. It's going to always, or it has an extremely high probability of not only producing a profit, but producing a big profit. PROMI, which tells you the selling has stopped. Notice how far away we've moved away from the T-line. When they gap it up the next day, what's it tell us? Basically, that the selling has stopped, and now the buying is starting with great force. I hope you are doing fine. What time frame is best for T-line for? All time frames. This chart right now, Foster, could be a 1-minute chart, a 10-minute chart, a daily chart, a weekly chart, a monthly chart. It could be any of them. Candlestick signals are what they call fractal. They work on any time frame. Slow stochastics at 1233. The blue line. What is the blue line? This is the 50-day simple moving average. So there's your bullish harami. And like everything else in candlesticks, the bigger the signal, the more compelling there's been a change of investor sentiment. The bigger the gap up, the more compelling, especially after a candlestick reversal signal, the more compelling you're now in an uptrend. The bigger the gap up, the stronger the up move. Or if we see a change of investor sentiment, like going through resistance, you see that we have kind of this downtrend. We've got a potential reversal signal. The next day they gap it up. It tells us three things basically. One, they're confirming this signal. Two, breaking this downtrending channel. And three, they're telling us the T-line is not acting as a resistance anymore. It's time to be buying. Hubert, it does work on charts. It works on anything. You just won't have any gaps in on Forex trading. So anytime we see that breakout, especially out of a pattern, in this case we see the fry pan bottom, and they gap it up, where do you think your next logical target is going to be? Somewhere up in that area going toward the 50-day moving average. So this is what we call convergence analysis. There's our little hammer signal followed by a gap up through the T-line in the 50. Those are bullish factors. Secondly, it closes above the 50-day moving average, telling us that this is not going to act as a resistance anymore. Third, it's broke this little downtrending channel. Fourth, It's doing what we call the bobble pattern. Bobble pattern is very simple. They come up, hit a resistance level, pull back, don't move away from the line. The second time they come up through, you're going to have a very strong uptrend. Does this include earnings, news, gaps? Yes. Remember, candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. And it doesn't matter why they're buying or selling, whether it's an announcement, whether it's a world event, whether it's earnings. All we're doing is graphically seeing what the investor sentiment is doing. So it works just as well, and we'll get to some of those before we get done here. So again, all these factors tell us when it came up through, after gapping up through off the hammer signal, above the T line, through the 50, broke this little downtrending channel, did the bobble, that tells us we got an extremely high probability. Again, what type of pattern is it setting up? This is what we call a fry pan bottom. And what do we expect coming out of a fry pan bottom? A very strong price move. So when we see this setting up, we start seeing everything confirming, this tells us we're in a high probability situation of being in a strong uptrend. We recommended what? Same scenario. There's our downtrending channel. There's kind of our hammer signal right smack dab on the 50. And again, this is the benefit of candlestick analysis, is we can see exactly what investor sentiment is doing at major support and resistance levels. Everybody and their brother is watching to see what's going on here. We can see immediately what's going on. Somebody asked me not too long ago, how many days does it take for your reversal signals to confirm? And the answer is 0. If we see a reversal signal and the next day they gap up, we're buying immediately because that's exactly what this signal was telling us. There was potentially going to be a reversal. Whoops, so there was that breaking that downtrend heading up. So what does a gap up reveal? That there's new extremely strong buying or selling coming to a trend. We can recognize what type of patterns that we're going to be looking for based upon the signal. There's our doji gap up. Remember, that's your best friend. Also remember, the bigger the signal, the more compelling you're going to be in an uptrend. Gap up took us right through this downtrending channel. It was significant information, and we're currently holding this position. Why? Because once we see a 45 degree, we've got a very simple parameter. Stay long until we see a candlestick sell signal and a close below the T line. In options, how far will you buy out? I usually buy the closest expiration, whether you're trading off a weekly, or right now I'm buying the Mays because that's the closest one. The reason for that is because we can see exactly what's going on right now from that trade. We don't need to go out beyond that. There is a phone-in number for audio. Yeah, I know that. Yeah, I had it last time. I just couldn't find the number again this time. Yeah, so options. I trade options. I trade futures. I trade currencies because candlestick signals work for all of them. And I trade whatever time frame I want to trade. If I'm a swing trader, I'm holding this as a swing trade. If I'm trading intraday, I'm probably trading off the 10-minute chart. So if I'm trading the dollar, crude oil, soybeans, live cattle, I'm trading off the 10-minute chart. And then I can make my decision whether I want to make that a day trade or a swing trade based upon how the intraday charts are working and how the daily charts are working. Yes, we use a cup and handle. That's part of watching to see what comes out of the fry pan bottom pattern. How do you find the best trades? They're all on MetaStock, pretty pre-set up. April 12th closed below the T line. April 12th, right here. But notice what type of signal it was doing here. It was very indecisive. Doji. And what was our trend already? Up. So what's our criteria? know the simple rule of the doji, which is the price is usually going to move in the direction of how they open it after a doji. So if we had been long here, we only had one criteria if we stayed long. That is, it had to open positive and trade positive. If it opened lower the next day, we're right out of the trade immediately. What are your averages? What are all your averages set up? I don't understand that. You have the yeah. This is the little green line is what we call the 3T, and the 3T line is a whole other training session. The further away you move from the T line, the more effective the 3T line becomes for you. Karen, I've got 3 books out on candlestick analysis. They're very easy to read. And I think when we get done, Jeff is going to be describing, we've got a 30-day free trial to our website. Let me finish this and I'll go through that and then let Jeff go through that. Oh, we've still got plenty of time. So the most powerful signals is the kicker signal. And why is it so powerful? Because the gap is built into the signal. If you're in a downtrend and they open it here and close it here, a kicker signal is the next day they gap it up at or above the previous day's open and go the opposite direction. Or if you're in an uptrend, they open it here and close it here. The next day they gap it open down here and go the opposite direction, which this used to be me. I'd be so happy, and then I wake up and there's a bad announcement and they're opening it here, and my first thought was, oh, if they would just go up one more time and let me out, I'd be so grateful. What I've discovered through the years is if you're in an uptrend and they gap it down the next day, get out immediately. Because if you're in an uptrend, they shouldn't be gapping it down below the previous day's open. But that does 2 things for you. This is all part of the candlestick analysis that kind of builds in your discipline. The biggest faux most investors have is their own emotions. Well, the more you learn how the probabilities of candlesticks work, greater it diminishes your emotions when you're making decisions. If I was long in a trade like this, next day they gapped it down, I close it immediately because that does 2 things for me. Close it out when I know it's going to be a bad trade, and then if it starts heading down, I know I can reverse it and go short because I know what a kicker signal is going to look like. They're going to go in the opposite direction. So whatever I lost in profitability that day, making right back up by going short. Oh, okay. I hope the sound is staying good. A belt hold, remember, a belt hold would be the opposite direction. And let me see a belt hold would be that you're in an uptrend, and then they gap it way up here and bring it back down to the trend. Signal is you're in an uptrend and they gap it down in the trend and go the opposite direction. Yes, so they open, here's the previous day, opens here and closes here. The next day they open it at or below level and go the opposite direction. So anytime I see a kicker signal, I'm buying because it's telling me that there's been a drastic change of investor sentiment. And you can see as this chart illustrates, this was trading flat until you had that little kicker signal, and notice where it occurred, right smack dab off the 50-day moving average. We want to be buying here in this range because we know the probabilities are pretty strong you're going to be in an uptrend. The bigger the signal is, the more compelling that uptrend is going to be. Do you look at kicker signals on daily? Again, because kicker signals have gaps in them, you don't see them very often intraday. Small bodies, no, small bodies are just indecisive trading. What you really want to see is big bodies. The bigger the bodies, the more compelling there's been a change of investor sentiment. So gap ups have expectations. When you see something gap up, we expect a 45-degree, and we've got one criteria. We want to stay long until we see a candlestick sell signal and close back below the T-line. If we've got a big fry pan bottom with it breaking out, notice how they started gapping it up right over here. What do we expect coming out of a fry pan bottom? Very strong price moves. What do we expect coming out of a scoop pattern? A good, strong slingshot effect. There's the belt hold. Notice how you're in a trading range, and they gap way down below the trading range, and they come back up into the trading range. That told you they took out a lot of sellers. Now, if they took out a lot of sellers, any buying doesn't have any sellers in the way, it usually starts a strong uptrend. And where do you expect a previous a price reversal? In the oversold condition. If I'm seeing dojis and then they gap it up, I know I'm in an uptrend. Where's my first likely target? At a major moving average. I'm taking profits in here. But then notice what we have. We got buy signals right smack dab off the 200. They gapped it up again. And notice what happened here. This is what we call the bobble. No sound. Is everybody else out of sound? Okay. All right. But notice what's happening on the bobble. They gapped it up through the resistance level. They gapped it up and closed above the 50 on this range. We can see what the bobble is. The bobble is if they break out through the 50, we're in a strong uptrend. And what type of pattern does this set up? Wave 1, wave 2, going into wave 3 of a J-hook pattern. There's your best friend. Anytime you can see, right now, this is yard. You saw the doji gap up over here. Strong uptrend. So you had a strong sell signal. Now you've had this little downtrending channel. And on Friday, you had a little doji came back up through the T-line. What's this telling us? If they open this positive on Monday, they're confirming this signal, number one. Number two, they're telling us that this downtrending channel is being breached. Number three tells us wave 1, wave 2, wave 3, and wave 3 is usually the same magnitude as wave 1. So this is basically just understanding the gaps and reversals. This is the message. Whenever we see a gap up through a resistance level, tells us there's a new dynamic in that that trend. Stochastics are 12-3. This is what we call the message. Notice it wasn't very enthusiastic once it opened, but the message was they gapped it up. There was a new dynamic. So what do? We just wait for the next buying to come back in, and we start buying. Win resorts, there was your doji gap up through this downtrending channel. Here, we're back in it here when it comes back up above the T-line. Basically, what this really does for us is just puts us in positions where the probabilities of being in the right direction at the right time is greatly in our favor. If one gap means strength, as we see here, we have a left-right combo. That's a bullish engulfing signal following a doji. Where was it occurring? In the oversold area, right on the 50-day moving average. And what confirmed our left-right combo? A gap up the next day through this resistance level and through the T-line. Been up 3% or 300%. We stay long until we see a sell signal and a close back below the T-line. We see anything that looks like a resistance breakout. The gap through, there's our kind of our doji bullish confirmation right on the T-line. You saw they came down to the 50, and the next day they started taking it back up. That told us we're probably wave 1, wave 2, going into wave 3. Oops, I'm trying to keep from going over time here. VRX, they've been trading this in our trading room, in our chat room. And I say our chat room, we're almost at the end. Remember, VRX had bad news, but notice what happened on Friday. There was a doji gap up. What's this tell us? That now the probabilities are we're back in an uptrend. Is the T-line 8 exponential? Yes. IRM, we recommended this a few days ago. Why? Because there was our uptrend, pulled back. Notice when it pulled back, what it was doing in this pattern. Lots of indecisive trading. Started coming back up. You could be buying here with the anticipation that you were in a J-hook pattern, or you could be buying here when they gapped up through the resistance level, showing you you're in an uptrend. Again, just putting the probabilities in your favor. Palo Alto. So, kind of a belt hold, gap up through the T-line. Where's our next likely target? Back up here to the 200-day moving average. So does everything work? Obviously not. But with candlestick signals, every time I put on a trade, I know the probabilities are greatly in my favor for me. Before candlesticks came along, I was the worst investor in the world. I was even a stockbroker for 8 years. And every time I decided it was time to buy, was usually whenever I bought. How come I bought right at the top and it would go the opposite direction? Well, now I can see graphically where I shouldn't be buying. I should be buying in the oversold area with buy signals. The oversold area with buy signals. Does every trade work? Obviously not. But the nice thing about candlestick signals is it tells you when to get in, and it tells you when something's not working, you get right back out. So I know that at least 1/3 of my trades aren't going to work. Now that gets rid of that ego emotional problem that when I see a trade not working, I just close it out because I know more that are going to work that I can get right into. Starbucks, as you saw, had a big gap down on Friday. And why was this different? Well, you had failure of getting to a new high. You had little doji type days, a gap down through the support level, the channel that it's been in, through the 50. I would suspect it's coming all the way back down to test this level. As far as this put us in situations where not only do we have a high percentage probability, but a high profit probability. In your chat room, I have to say it is the best. Oh, okay, thanks, Karen. I look for high volatility stocks to screen for these. You might as well. If you've got a chart that looks great, like on Monsanto, but you know that if it works, you're going to be up 4% over the next 3 weeks, or you've got another chart. Let's see if I can find something. If you got another chart that looks like you're going to be up 30% over the next 3 weeks, obviously you want to go with the one that's going to be 30%. Candlestick signals work on all charts, whether you're trading commodities or bonds. It doesn't matter what the risk factor is. So up to each person as far as their risk reward, how aggressive they want to be. To trade the indices, I used to trade the E-minis, and you could still trade the E-minis off the 1 minute to 10-minute chart combination. I used to trade the E-minis, except by the end of the day, it felt like a wet dish rag. So it's much more comfortable for me. Yes, so whether you're trading the Qs or the YMs or the E-minis or any ETF, candlestick signals work the same way. If you see a candlestick signal when the Cat 6 is in the oversold area, if you see a candlestick buy in the oversold area, would you still take trade? That's exactly where you want to take the trade, Trevor. Now, if the question is, if you see a candlestick buy signal in the overbought condition, no. Where does it logically a candlestick buy signal work? In the oversold area. Where does a candlestick sell signal work? In the overbought area. So a candlestick sell signal in the oversold area doesn't mean very much. A candlestick buy signal in the overbought area doesn't mean very much. So I can see I'm running out of time here. Yes, you can trade currencies. I trade the dollar, the euro. They work just the same way. Foster, I don't know how to answer that. I'd have to look at it. What time frames do you predominantly use in currencies? The 10-minute chart. And usually I'm trading off the 10-minute chart for my entry. The currencies, like the dollar, move a lot more slowly. So I'm usually trading those on a longer swing trade basis. What would you look for to add on to a position? Karen, I don't add on to positions. My money management is to keep all my emotions out of my trading as much as possible. Like I've got about 5 more minutes. So if I've got let's say a $500,000 account, I'm going to put $50,000 positions on. Because what's our biggest bugaboo in our trading? Our own emotions. If I see a trade that looks fantastic, you decide, well, my normal position is $50,000, but in this one I'm going to put $100,000 in. You can bet dime to donuts that if you're watching your trades the next day, you're probably spending 90% of your time watching the one that has $100,000 in it and not paying very much attention to the others. So I keep all my trades equal dollar amount, because if that fantastic trade didn't work, instead of holding on to it for a few extra days because I know it's going to work, get out of it 2 days after I should have, you can look at each one and say, this unit is not working, move out, move on to the next one. I do scale out. If I see a situation where it looks like it's time to take profits, I might sell half the position because I'm in the overbought area. I've had a gap up in the overbought area. If it continues higher, at least I'm in a half a position of a higher risk situation. If it opens down here, whoops, at least I can rationalize that I sold some here and sold some here, so my average sale is somewhere in here. How to avoid whipsaws? The whipsaws are pretty easy. If you see it's whipping up and down above the 8 or above the T line, you pretty much can calculate that you're in a whipsaw mode. Get out of it and move on to something that has a trend to it. What risk-reward ratio do you use? Anytime I look at a chart, I want to see if I can at least make 10% on that trade. That's not anything set in stone. That's just worked successfully for me through the years. Do you have a 4-hour daily time frame for the same trend? I could too many before I take my entry. Oh boy. I have people in the chat room. Now the chat room, I want to say is, we've got about 180, 220 people in our chat room every day. We've got one chat room that's directly for learning candlesticks, and we've got plenty of traders in there that are very great at finding the good charts. And then, so Jeff, just tell me when I'm cutting too close to the end of the time.
It's getting close.
What?
I said you're getting close.
Okay. We also have a chat room for trading options and futures, so that the conversations are different in those. Again, there is nothing, this isn't rocket science. Risk reward. Oh, I'm sorry. Diane, I don't have the risk reward as far as buying a position. Yeah, I'm still looking at something that I know I can at least make 10%. Do I make 10%? No, but I want to at least have the potential of making 10% on trades. Tell us about filling the gap. A gap, yeah, the old adage is a gap will get filled. But I may not be worried about it. I'm trading this trade. This gap may not be filled for 2 weeks, 2 months, 2 years. I don't care. I'm trading this trade right now. Do you believe in journaling? That means, yes, every day I write down what I did right and what I did wrong, because our minds are very fickle. If you do a mistake, what's the first thing you'd say after you close that trade? I'm not ever going to do that again. You're only going to do that maybe 8 or 10 more times before you learn not to do it. If you write it down, go back and study it or review it every now and then, maybe you only make that mistake 3 times before it settles in. Is a chat room or a slaughterhouse? You would get killed in a market using subjective. Okay, Phil, that's fine. Guess what my statistics for success? Let's just put it this way. I make a very good living. I've got 25 classic cars. I've got house in Houston, house in Pittsburgh, house in Seattle, Washington. Opens lower, yes, I'd be shorting it. Yeah, so, all right. So with that, I guess Jeff's going to chat rooms just to see, get more clarification. So with that, Jeff, if you want to come on and let them know what...
Yeah, I was just answering to all of this positive feedback on your class today. So anyway, great job. Really appreciate that, Steve. I'm going to go ahead and switch to my other microphone now. Thank you, Steve. Really appreciate you coming in today. Let's go ahead and... Oh, you know, we figured it out. That's the important thing. And it only took 4 minutes, so we're okay. Okay, let's go ahead and change back. I do want to show, I love Steve's methods very personally. I want to show you kind of, we had a lot of people asking about, well, how well do these work on Dow? And as you may or may not know, I'm a pretty active Dow option trader, and this is one of the things that I look at very, very consistently. And I just want to kind of show you some of the things that have been very, very helpful for me. Back in October, you know, we had this big, huge market correction. If you're looking at these patterns, there's a doji at the top. Before that, there was a bear kicker. A very, very good entry. Unfortunately, I didn't take that one. Here we had another doji at the top, but you would have kind of exited out that real quickly on a stop loss. Here we had a doji best friend. This is actually a trade I personally took. Followed by a couple of days later, we had that, what Steve was calling his left-right combo. And just ran up and ran up and ran up. Very, very good move up. Here we had some pretty good moves. Again, it happened this year after the big crash that we had. We had a doji best friend. What Steve was saying was his favorite pattern in trading. And it was, if you'll notice, pretty close to the bottom of this W pattern that formed in the market, and we've been kind of going up ever since. And it just works really, really good, especially if you apply the money management lines, getting out after it goes against you in the T line. Very, very good system. We do, of course, have it with the expert commentary. A lot of these patterns are a little bit subjective in terms of the fact that you're looking for fry pan bottoms, or you're looking for dumpling tops and that kind of stuff. So what we did to kind of help you with that in a particular commentary, I'm gonna kind of zoom in on my chart right here just to kind of show you this particular part of the chart. But I'm just going to move this this over to the doji best friend to show you kind of like what you would see on a chart if you're using this. So the doji best friend occurred. Here's how you should look to trade this. You should be alert for this opportunity to get into a new long position. A gap up after the doji or spinning top formation while prices are in the oversold area is an excellent alert. I have to go really quickly right now. Expect strength if the uptrend is over the last part closed above the EMA. So we're telling you what to look for. Since some of these patterns are somewhat harder to program, like a doji best friend isn't, but certainly a dumpling bottom is, and that kind of stuff. It took a while to develop this product. I'm very proud of it, but we give you exactly what we're looking for to create the alert, and that's kind of what you're going to see here. Now, because a lot of the time when you actually run the scan, you're probably going to have like 5 or 6 different patterns that you can look at, and you're trying to evaluate. We actually tell you what to look for. So if you're looking at a few trades, like this is a doji best friend, and you want to take a different doji best friend, what you would look at is kind of the further away from the doji it occurs below that T-line or that 8 exponential moving average, the higher probability the reversal has occurred. If the day after the doji gapped up above the T-line, where it closes above the T-line, the higher probability the strong uptrend is. So each of these patterns actually have that commentary. So if I come over to this T-line crutch, it's going to have different commentary that tells you specifically about that pattern, specifically what it means, and specifically how you should implement it. It's a great learning tool to kind of help you understand Steve's patterns and what he's doing with them, and it's very, very unique to MetaStock. So in addition to this, we do have the explorations. We just want to show you real quick, again, we are kind of running a little bit slow on time, or a little bit fast on time, but these are the patterns that we're looking for. So you're looking at the fry pan, the bullish belt hold. As you saw on the chart, all of these patterns that are listed up here are actually going to be labeled and identified automatically on the chart for you. Each of them have the commentary, and with the exploration, you can come in here and you can actually say, well, since there's so many different patterns, a lot of times the scan that I'm running is going to be like looking for doji best friends. And if you hover over any of these, it'll tell you what that scan is going to run. You just basically select the one that you want. It's going to, the list that you want to scan it, and it's going to go through on whatever you're interested in and show you, again, all of those opportunities that exist in the chart. So very, very cool. With this particular product, we released it a few years ago, and it's been extremely successful. And in addition to being very, very successful, it's actually been rated 2 times as in the Reader's Choice Awards by itself. So not just the best product add-on for MetaStock, but of any platforms out there, it's actually been rated a runner-up, which is pretty cool. So with this, you're going to get 4 explorations. You're going to get that expert advisor that kind of puts together the commentary, shows you all of those different alerts on the chart, all of that kind of stuff. Of course, you're going to get a layout, and you're looking for those 21 different patterns. So I'm very, very happy with this product. We spent probably 2 or 3 years just getting it perfect. Steve was a champion. He sat down with my programmer for probably probably 80 hours over the course of creating this product, just to make sure we had all of those patterns tuned and set up properly. So very, very, it is open source code. You can go in there and look at it if you want. The product itself is normally $3.99. We just talked a little bit about the winning momentum. This is the Steve Bigalow candle profit system. Very good products. You know, we're really bringing in, somebody said it earlier, but we're bringing in the cream of the crop today. We have such great presenters. And some of my favorite add-ons definitely are included in this. It's normally $3.99. If you just buy one of them, you're going to save $50. If you buy 2 of them, you're going to save $75. If you buy 3 or more, you're going to save $100. You're going to get 2 years of Stocks and Commodities magazine. And to take advantage of that, just give us a call at 800-882-3040, or visit us online at metastock.com/summit. It allows you to sign up for a MetaStock trial, the extended trial, which I'm going to tell you about real quick here. And it also allows you to order any or all of the add-ons that you're interested in the day. With all of the add-ons that we sell, we do offer them on a 30-day money-back guarantee. So take advantage of it. Take a look at them. And I hope some of these are as helpful for you in your trading as they've been for me personally in my trading. So the 3-month extended trial for MetaStock, if you haven't used MetaStock before, you don't know what you're missing, you should try it out. It's $59 a month for the DC version and $250 a month for the real-time version. MetaStock, not to get on a huge tangent about MetaStock, I'll have my chance to do that later when we're not pushing time. But it's been rated #1 24 years in a row. There's so much stuff you can do in it. It's such an awesome platform. And a 3-month extended trial on DC is going to cost you $20 a month. You'll prepay that for 3 months, basically. If you like it, if it helps you make money, you're going to keep using it, right? So, and that really allows you for $20 a month or $59 right now, May, June, July, to run this into July 23rd, which is just a fantastic amount of time. By then, you'll definitely know if MetaStock is the right fit for you. Okay, so again, take advantage of that, metastock.com/summit, or visit us at 800-882-3040. I know a lot of you have asked some questions. We do have quite a few reps on the phone. They're pretty busy, but give them a call. They're all very knowledgeable. They can answer questions that you have, and I will do a little bit of a Q&A at the very end of today too. But give us a call, 800-882-3040. I do want to take a moment to thank Stocks and Commodities Magazine for sponsoring the events. They're such great partners of ours. Such a great magazine. It's one that I've been reading for probably 20 years now. But if you subscribe to the session today, you're going to get a free copy as long as you opted in for that offer. And if you do any service, you're going to get at least 5 months. But if you do any of the add-ons, you're going to get 2 years of subscription with Stocks and Commodities. That, of course, includes the current articles for Stocks and Commodities and every article they've published since